Good morning, everyone. It is April 1st, 2021. No fooling. I cannot believe it's April 1st. And of course, here in Chicago, opening day in baseball, Cubs playing, and it's in the 20s. To be expected. I wouldn't be surprised if we saw snow flurries here in Chicago because we kind of have to have that on opening day, just like we have to have it rain on Halloween. This is Nadex Morning Analysis. My name is Todd Rich. I am with Nadex. With me, my good friend Brian Caprice from Keep Trading Simple. Before Brian and I jump into hot spots in the markets today, where you might want to be looking for the last trading day of this week, because we are off. Markets are closed tomorrow for Good Friday. I need to share that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So today, I think what we're going to be looking at, one, gold. I think we're going to look at gold right out of the gates because gold caught a bottom and it did bounce. It popped back up through that 1700 level. So we'll take a look at gold. And then because we're talking about gold, the proxy for gold in the foreign exchange markets, the Australian dollar. So we'll do a little analysis and take a look at what's going on in the Aussie dollar. They've also had some economic reports that came out last night that Brian was talking about overnight. So there was definitely trading opportunity in whether it was the Aussie dollar or the Aussie yen. We'll take a look at that, and I'm sure we'll do a quick touch up on oil just because OPEC Plus is meeting again today. So with that, Brian, I'm going to actually flip this over to you, and let's go ahead and take a look at what's going on in gold.
Right now, so gold, obviously, yesterday you can see we were sitting right down here for the market open, and we had a huge rally up again. Was to be expected. We were looking for longs. We were looking to see if we get a little bit cheaper. And again, whenever you announce plans for a $2 trillion package, you would expect there to be lots of spending, lots of money. I guess somebody called it an ultra loose policy. You expect to see, and again, inflation, right? And that is what has driven gold higher. Since that time, it kind of petered out about 1 o'clock yesterday and kind of pulled back and kind of, we basically ended the day kind of more or less, just kind of, hey, it's there. We pulled back. Whew, that was crazy. What else are we going to hear? And then since that time, it's kind of done a little bit, I would say. It went a little bit higher with the Aussie, or I'm sorry, not the Aussie. The Aussie news last night went a bit higher, and then we had a little bit of a pullback and we're flat from the European Open. So I would say today, we can expect a little bit more. We have OPEC speaking today. So that's going to kind of throw a little bit more into gold. Again, the commodities market, they tend to kind of follow each other a bit. I would say, again, going into the, kind of the holiday weekend or whatever, I would expect gold to rise a little bit more. Again, the areas I'd be looking for, and again, more of a reversal than anything else, and I'll tell you why in a second, is up here in this really 1723 to 1725 range. It's kind of one of those things. It's a level where we've seen sellers come in. It's a level that gold spent a lot of time. It was really kind of not doing much trending back and forth in this level. But the last really big extended range candle we saw was, again, up here around that 1724 level. So, if we push back up again, all these people that were in now, these pullbacks, is profit taking. After you get a successful position, a lot of people will be trying to close their position down before the weekend happens. Right. Those are things that we're going to have to look out for. And the reason why I do think we are due for a reversal is actually something that we saw this morning from San Francisco Fed president. Now, we don't really see much out of her. You don't really see many statements. And it's kind of, again, is it the news trying to push the agenda of that side? Is it a political post? The Fed is supposed to be completely non-political, but I don't know. It says why this matters. Basically says many are worried about the combination of trillions in spending on coronavirus relief, the Fed's ultra-loose monetary policy, and Biden's big stimulus plan for infrastructure, education, and manufacturing will set the table for out-of-control price increases. She says that she feels that it's unlikely to be true, joining a crew of economists that say, no, I don't think that's true. So it is an interesting take, and again, it's not supposed to be political, but at the end of the day, you have many different factors and a lot of money out there. And again, with interest rates being as low as they are, you got to kind of think here at some point. And again, we're talking about tax increases. Where do tax increases in businesses typically get passed to? Products and consumers. So I don't know. I'm not exactly sure where she's standing, but I just feel that, in looking at this and hearing everything, I'd expect the gold to go a little bit higher and then kind of peter off as people are
Yep.
capturing their profits. Because again, we haven't seen inflation yet. Remember what Powell said last week. We want to see actual inflation, not forecasted inflation. And it's not here yet because the economy is not, I mean, we're not back to where we were before, even though everybody is trying to paint the picture that we are.
Yeah, I was gonna say, do you have the Daily FX website up real quickly too?
Yeah, I do.
I thought was rather interesting.
Yeah,
Take a look at gold and take a look now. Look how many people are long gold. It's 84%.
Yeah, I mean, it's less. It was, much higher. So, I mean, we're definitely getting less on this one where people are like, yeah. And people will probably start jumping back in. But again, some of this is that profit taking people. And remember, when there's a change, you want to be the first people in the change, not the last people in the change. So there will be new people stepping in saying, yeah, this is great. And then all of a sudden,
I actually also see some of these people that were holding it as it plunged, seeing a pop and just getting an opportunity to, okay, they're giving me a chance to get out. I took my pain. I've got to reassess. So I'm with that. Actually, I wanted to bring up the Nadex platform and take a look at this. And these are the levels that Brian, you'd mentioned earlier. I mean, we did get through that 1700 level. It didn't even, not 1700. Usually we tend to see a pause one way or the other. On the way down, it didn't, maybe a little bit over here. On the way back up, it just plowed through it. But I mean, there is some support in here, but as you mentioned, if we were to kind of drop down a little bit, this 1725-ish range. So, looking for a potential rollover. I don't know if you would want to necessarily do this with knockouts, just because there's not a lot of time left. So I think really the way to potentially play this is take a look at the gold, and we could take a look at the daily binary options. Because there's not a lot of time left in the day, and because things are closed tomorrow, I'm thinking, I wanted to extend the chart out here. That's because I clicked on oil. I'm like, why does this chart look so funny? Brian, you're supposed to say, hey, you're on oil. Not,
I know. Wrong one.
Pick the right one. You got to wake me up. I need some more coffee. There we go. So because all these binary options are either going to go to 0 or 100, there might be an opportunity up in here to potentially take a short position as oil creeps up. This number will get closer to 50-50. And if you think it's just going to roll over at the end of the day, as people look to liquidate, and people are looking not to carry it over the weekend because it is a long weekend, they don't know what's going to happen, there might be an opportunity to go short a couple of these binary options up here. The other way also, if you think it's going to keep creeping higher, you could potentially just take a higher probability trade. If you think it's, at least if it creeps higher, it's going to stay above some level. I mean, these are already being priced in up near 100, so not much in them. But binary options might be the way to play gold today, just because there's probably not enough time for knockouts or call spreads to potentially make a move for you. But all right, so I think that's enough with gold. Do you want to do a quick, let me jump back over here. There was one other thing I wanted to mention about gold. You mentioned something too with low interest rates, and I do think this is actually a good point. That the interest rates, as they creep higher, people keep going, oh my God, interest rates are going up. You better watch out for gold. But historically, we're still at dirt cheap interest rates. I mean, interest rates are still down extremely low. When I can refinance my mortgage below 3% for 30 years, we got low interest rates. So even if they go up a bit, it's still in historical context a pretty low number. So,
and you can refi. You can refi, but you can't buy a new one. Inventory is down like 24% because nobody's trying to move right now. They said it's the lowest it's been in like 20 years or something like that. I was listening to that yesterday.
So interesting. All right, so let's, just with gold, I do like it as a lesson. I mean, Aussie, Australian dollar, Australia, look at the Aussie dollar, Aussie yen, but the Australian dollar is a proxy for gold. I thought we might want to take a quick look at what went on in Australia, because they did have that economic report last night. You called it out. There was a move. And then it's kind of retracing the move right now. So
Again, and it's interesting. I mean, you can see the same move in both. I mean, here's the Aussie coming down. You know, it ended up blowing right through a level. It hit it, bounced, and then came back in, based in it, and then dropped again. So again, a lot of the techniques that we talk about here, um, you know, whenever you see that basing inside of a level, it's kind of a telltale sign that, hey, listen, it's about to break when it goes through, and it did, and came all the way back down to the 1735, a level we talked about, and came back up again. So what's interesting about this, again, a lot of the movement is out of this one. Really, I mean, I wouldn't say either one of them is in a kind of an ideal setup right now. I mean, we obviously see some movement. I'll go ahead and delete this off so you guys can get a cleaner view of it. I mean, you can see that we have some basing coming in right around here, you know, coming in right around the 84.10 area. There's nothing stopping it until then, and I think we can absolutely make it back up to that level. And most of what we're seeing is just a retrace of the actual news event. You know, we had that 84.36. It came up to there, stayed within the zone, and, you know, absolutely collapsed. It was a very large move just in the overnight. I mean, 105 pips in this one. It has a daily ATR of what? 78. So again, nice move off that news. And again, if you guys are trying to figure out what news we're talking about, remember last night I said this is going to be probably the trade of the week, right? The easiest one to grab because it's 8:30 p.m. We know that you know, there's nobody else open besides them. Those tend to be great setups. And again, it went down and it was a positive number. You're like, wait, that makes no sense. It was a good number. It should have went up. No, it doesn't matter what the number is. Remember, there's positioning that occurs ahead of time. It's just the fact that it drives you towards a specific time frame. You say, hey, listen, at 8:30, there's probably going to be some good movement. And there was great movement off of it. So, you know, right now I would say the Aussie is probably just more or less kind of retracing where it was. I would say if we get up to this level sitting here at, where is it? Right here? Right there around 84.10. I would say you would kind of expect, you know, maybe a little bit of a rollover. If we can get up to the 10 o'clock, again, then the yen will kind of start stepping in. We could see somewhat of a reversal to the downside. Aussie, probably the same thing. We have kind of that same basing area, about the same distance. We know that we have kind of movement in here where prices kind of hit it, come back, tested it, and then dropped again. So it starts kind of falling when it hits the level right here around 75.96. Now, I will say with OPEC today, again, the Aussie doesn't really have any kind of link or whatever. It doesn't have the same type of proxy like gold does. But again, OPEC does have the potential to kind of make some statements about recovery, inflation. I mean, they do have the ability to make some statements about what world recovery looks like. And if it's overly negative, that it's slow, that could also hurt the Aussie because, again, everybody's in agreement that the U.S. is well ahead of other people with vaccinations. And again, all the production facilities are here. So it makes sense that we're already ahead. Again, that could give us that dollar strength in there if they talk about how bad the world actually is and lower demand because the world is in a bad place. But we know the U.S. is ahead of the rest of everybody, which again would be dollar strength, finding a level, maybe seeing a little bit of a bounce like this, and then again a potential kind of push back to the downside.
Yep. You know, I did want to take a look at the Aussie yen at least quickly on the Nadex platform again. 6 hours here left in the day. And the question is does it continue this retrace? And binary options again. There's, you know, what's the probability? What's the probability that it's going to stay above 83.80? You know, I mean, right now with it seeing some support, I mean, it might continue to do its retracement, finish its retracement. It might roll over a bit, but will it stay above this level? Is there an opportunity? You know, a higher probability, you know, you're risking more and making less, but is there a chance that you could potentially still make a couple of bucks today on this? There's things to be looking at. And then if you're looking for it to at least eventually retrace and then not punch any higher, I mean, there's ways to also, you know, you could start playing with some of that as well. You know, position it up. You could do it with you know, you might even be able to trade with a couple of different contracts. Try to catch a move both ways. All right, I think that's good on the Aussie on the Aussie on gold. You've mentioned OPEC several times today. You know, I thought you want to take a quick peek at what's going on with gold to kind of wrap it up for this Thursday. Before the long weekend.
I mean, we're seeing some of the headlines we're starting to see are just coming out now within the last half hour. The Saudi energy minister says that oil recovery is far from complete. We should maintain cautious stance as continuing with flexible approach serves us best. Basically showing a couple things. What else did we see here? OPEC Plus says we're talking to the return to the phased monthly output of hikes is considering maintaining current cuts. So some of the things that we're seeing out of the headlines out of OPEC are not necessarily the most positive. They're talking about maintaining the cut, showing that we're not back up to where we used to be. So I don't know. It's not the most positive thing out there for oil, but if we look at oil for in the overnight, again, we're kind of seeing things bouncing back and forth. This is a 30-minute chart. This is a level that we've seen kind of basing before. It's been tested once, pretty deeply too. So it's kind of one of those levels that's like, it's not bad. I would say right now, kind of where we were yesterday is sitting right over in this level right here. If you guys can see where my cursor is. We grabbed that level one more time. And again, it wasn't the biggest level, but it had been kind of tested. It gave us a huge push to the downside. So again, it is number 4 if we can get back up to $61. But with the power that this thing launched off of and where we are, it's a level you got to look at and say, okay, what is it about $61 that sellers are really stepping in hard? Because, it's a level that we had here respected. We had a level here respected. And then all of a sudden here, it kind of did like a double, almost that like kind of Harry Potter confirmation, right? That failure to go higher. And then it got hammered to the downside. So it's one of those things, psychological. It's 61. It's not as good as 60 or 65, but you got to respect the fact that this has happened. And then even on like a little bit of a smaller time frame, we do have an area kind of sitting up right here. And again, we've hit it and kind of bounced back, although I don't know if I would trade it necessarily now because this level bounced at about 6 o'clock in the morning. It's not the ideal kind of time for a level to be hit. But again, we're hitting this level up top, keeps getting hit. This was 3 o'clock in the morning for the European Open. Then we hit it at 10:30 for a reversal, and then we hit it at 1 o'clock in the afternoon. So they're all legitimate times for us to get in there. The question is, and again, the oil market has that kind of smaller time frame of when it's actually open. It closes a couple hours before other contracts. That's the only word of caution that I would say, especially with tomorrow being a holiday. But right now with the movement up, I would say, hey, listen, if we can get to 9:30, 10 o'clock and we don't break this level, I wouldn't necessarily be surprised if we do have some type of a pushback to the downside. Only because, again, OPEC is being very cautious, talking about maintaining the cuts. I think everybody expects them to say, hey, listen, we're good. We're going to get rid of those cuts. And if they do, if we get one headline, that will bring oil back to the downside.
Interesting. All right. Excellent. All right. Listen, we went a little bit longer today, but there were some fun things to talk about, particularly gold breaking up through that 1700 level, seeing some action in with the Australian dollar, either in the Aussie dollar, US dollar, or the Aussie yen pair. Some opportunities in there. And then clearly gold might be a bit in play with OPEC talking. You got any questions for Nadex, please email us, customerservice@nadex.com. Brian is also accessible. If anyone's got any questions for Brian, please email him, support@keeptradingsimple.com. With that, remember, it is a long weekend, so Brian and I will be back on Monday. We will catch you Monday morning, and we'll see what today's got in store for us, April 1st. Man, I cannot believe it. The first trading day of Q2. With that, want to wish everyone good luck in the markets. We'll catch you on Monday.